Welcome, everyone, to this week's 2-Minute Warning featured interview, where we take a deeper dive at the energy transition that's occurring here in the Middle East and, of course, globally. I'm joined here today with our distinctive guest speaker, Alzbeta Klein, who is the Director and Global Head of Climate Business at the IFC. Welcome.
Thank you.
Before we, of course, our theme for today is how to bolster green financing mechanisms in the Middle East over the next year. But before we get into that, I just wanted to get your overall perspective coming from a global aspect on, of course, the COVID-19 pandemic and how you feel if that has accelerated the energy transition, and of course, climate business opportunities, or do you think it's more of, let's say, a speed bump along the way?
Great. Thank you, Brian. So first of all, thanks to you and thanks to Gulf Intelligence for inviting me to this discussion. Delighted to be here with you. I work for the International Finance Corporation, part of the World Bank Group, and obviously we have a lot of business in your region. So delighted to be here with you. So what is happening today in the world? I think the global pandemic has actually sped up the trends that we have seen over the past 10, 15, 20 years. It just made them more pronounced and it made them faster. So what you are seeing today in many of the sectors, whether it's energy sector, whether it's agribusiness sector, whether it's how cities are built and constructed, whether it's financial sector, those trends have been there all along. They just have been severely accelerated by COVID. And if certain things were sort of meandering and getting there before COVID, they are very clear today. And we are seeing it in many facets of the business, and especially in what we call climate business, the businesses that affect transition to lower carbon trajectory globally. And there are several trends that I'd like to highlight here. So first and foremost, I think realizing that climate is a threat, but it's also a huge business opportunity. And you are seeing oil companies all around the world literally pivoting as they go into slightly different business models. You are seeing agribusiness companies doing different and interesting way of using technologies to get us food on the table. You are seeing cities trying to think through what public transport is going to look like, and you're seeing financial institutions facing digitalization and also the pandemic trend. So all of this is changing. And on the other side of it, you are seeing pressures from investors. And I think this is a key trend that we probably should be exploring, is what the investors want, what investors want in their portfolios. What is the trend that we are seeing with pension funds, with various large asset owners who are saying, okay, this is not working for us. This way of how we constructed the world was great for many, many years, but we are seeing through this pandemic that it's not going to probably get us for the next, where we want to go in the next 10, 15, 20 years.
And when we were talking about, I would say, essentially this green recovery at the moment and these opportunities, what role does the IFC play in helping to accelerate those opportunities? And of course, coming at a time when I would say, those investments are needed to help expand upon these as well.
Right. So some of your readers and listeners will probably remember Control-Alt-Delete when computers started many, many years ago, and you had to reboot and you had to restart. Actually, we still have to do it now occasionally. But I feel that we are in this Control-Alt-Delete moment in the world. We have an opportunity to rethink and restart and just rethink how we actually go about it. So what do we do in IFC? In IFC, we finance companies in emerging markets, including your region. And we focus on the poorest of the poor countries and sort of mainly fragile, conflict-affected states, poor countries. But we are financing companies in those markets. And so when it comes to green recovery and post-COVID recovery, there are two phases. The first phase is when the COVID pandemic hit back in March. It was all about liquidity. It was just bringing liquidity to the market, bringing financing to the markets because everyone shut down. So how much space do we have for tilting the recovery greener? Well, we can choose which companies we want to support. And we decided to support those companies that have the ESG, environmental social governance profile that complies with our standards and that they have done good things in the past years. and we help them in this immediate liquidity stage. But I think the huge opportunity that we have in front of us is the green rebuild. So once this is all done and we can all go out and start traveling and start doing things that we want to do and start building new capital investments, new capital expenditures by companies, they can actually start tilting green, and they can start building things that are going to be relevant not for the past 20 years, but for the future 20 years. So if you're seeing what's happening with major oil companies and their announcements over the past sort of 6 months, it is not by chance that they say, okay, we are going to look at financing charging infrastructure for electric vehicles. We are going to start looking how we can do offshore wind, because who can do offshore wind better than oil companies? It's about marine engineering, right? So we are seeing this tilt of the business model, and that is the green rebuild that we would like to do. So in IFC, we are focusing on both immediate liquidity needs of our clients, which we've been doing for the past 6 months. But as we look forward, as we look to the new year, new calendar year, we are going to be focusing on how we can help them on the trajectory to build the companies for the future, to basically make the company climate proof, make the company for the businesses that are going to be 20 years from now, not for the businesses that we had 20 years ago.
And when we're talking about the Middle East, just zeroing in on that a little bit more, as you just mentioned with oil companies, of course, seeing this opportunity and restructuring, you have the IOCs of BP and Shell, and the Middle East, of course, here is going on that path. In terms of regionally, if we look at the overall global green finance, let's say pie, green bonds and green loan issuance reached almost $260 billion last year globally. Of course, I believe that marked a new global record. Considering that the Gulf nations want to become, let's say, greater thought leaders in this space, how quickly and realistically do you expect the Middle East to take a larger portion of that overall pie and to play a larger role in that global narrative of this transition?
I think, Brian, we have a huge opportunity there. So when I look at our business in the Middle East, it is actually about a half of what we do in climate business in the Middle East is renewables. And yes, those are oil-rich countries. It is an oil and gas-rich region, but we have seen huge steps towards renewables. And a couple of examples for Middle East and North Africa, we have financed several projects in Jordan, for example, called Seven Sisters. We have more recently financed Benban in Egypt, which is the largest solar installation in North Africa. And we are working across the region on a number of renewable energy projects. So if I look at sort of what we do and try to approximate where the region might be going, I think renewables are going to play a huge role, because it's a unique opportunity to actually build up something which is even cheaper than what you get from traditional fossil fuels. Now, a couple of other things that we are seeing is climate smart agribusiness to a degree, but it's not a region where there is going to be a lot of it. But we are seeing that green construction is starting to play a role. So building a type of building that is better suited to the environment where it's positioned. And we in IFC have a certification for emerging markets called EDGE, and we are seeing growth in our client companies in the Middle East and North Africa who are starting to use that and build with a green certification. So the buildings are more energy efficient, and honestly, they are cheaper to operate. So it's in the interest of the client to actually do it because it is cheaper to run. Now, green finance is actually, it's interesting because I don't think the region has used the opportunities as much as perhaps some other regions. And I think there is a reason for it. A lot of the companies are financed locally from local capital markets, and they haven't seen the pressure from investors that perhaps other companies in other markets have seen. So investors in Europe and North America have actually moved quite strongly into green bonds and green loans and ESG-linked loans and sustainability-linked loans. But I think my hypothesis would be that the companies in the Middle East probably don't reach out to those markets and haven't seen the demand for these kind of products. But I think it's an untapped opportunity, because we have seen that when a bank, for example, issues a green bond, oftentimes these are oversubscribed. There is a huge investor demand for it. When sovereign debt is issued through green bonds program, and we've seen a number of countries issuing green bonds on a country's balance sheet, again, oversubscription is quite substantial, and those are a good way of fundraising. So I think it's a bit of an untapped opportunity not to go into those markets. And then the other type of the market is a sustainability linked loans. So this is not a use of proceed type of loan where you say, I'm going to finance solar installation and therefore I'm going to raise, I don't know, 100 millions. This is about characteristics of the company. So the company decides to do A, B, C, D on the environmental and social front, and investors hold them accountable, and they get better rate when they do it right, and they get slightly worse rate when they don't achieve those results. And so it's something that is motivating, and it comes with financial incentives. And we've seen a number of companies, both from developed markets and from emerging markets, to tap those sources of funding. So I think it's something to think about for the Middle Eastern companies as they think about their expansion.
So do you think that, just looking at the overall ecosystem here in the Middle East, for example, Saudi Electric Company's $1.3 billion oversubscribed green sukuk, and you've mentioned this, of course, just now. Do you think that these are more just headlines, and that it's just reflecting kind of those upper tier, opportunities for those type of stakeholders, or do you think that there's actual real change occurring throughout the financial ecosystem here?
I think it's becoming much more of a mainstream. If you asked me this question about 3 or 4 years ago, I probably would have answered differently. But today, there is a trend, and I don't think it's a quick sort of flash and gone. I think it's here to stay. And is it for the top tier companies, or is it for all the other companies? Honestly, I think we are past the stage where it's just the top tier. So if you think about the green bond market, for example, it started 10 years ago, and it started by multilaterals, right? So the first issuer was European Investment Bank, and then the World Bank, and then the IFC. So if there are 3 parents to the green bond market, that would be the 3 institutions, 3 multilaterals. And then from there, it moved to sovereigns, right? So France issued green bonds, Poland issued green bonds, I think Indonesia had the green bond, a few others. And now it's going to companies, and it's going to financial institutions. And the next one is real sector companies. And that trend we have now seen in a number of other areas of green and sustainable finance. So yes, it starts with the largest. It starts with top companies in a particular jurisdiction, because they get access to funding. But it has moved beyond that. And I'd like to give you a couple of examples. So a couple of years ago, we set up a fund with Amundi, which is a French asset management company, the largest green bond fund in emerging markets for financial institutions. So what we wanted to do is link up issuers of green bonds, banks in emerging markets, with investors via Amundi. And then that fund reached $1.4 billion. And now we know that many companies, many banks in emerging markets can get funded through investors in the fund. And then earlier this year, back in May, we had a third closing of another fund called Regio with HSBC, which looks at real sector companies in emerging markets. So not the banks, not the financial institutions, but real sector companies, utilities, agribusiness companies, manufacturers who are thinking about transition to greener growth or lower carbon pathways. And so it has moved from the top tier multilaterals to the sovereign, to the financial institutions, and now to the manufacturing companies. And I think it's going to continue. We are seeing several funds set up by other multilateral banks. For example, AIIB set up similar funds to what we've done for Amundi globally. They've done it for Asia. A number of others are now doing it for other regions. So I think there is a good opportunity to do something similar in the Middle East.
What do you see as the biggest barriers to accepting this transition in these new climate opportunities for businesses? Do you think it's part of the, let's say, the culture aspects for some companies, or do you think it's solely on just the access to finance in that sense?
I think it's both, but we have worked with a number of companies. So IFC has about 2,000 clients, and we have about $50 billion invested in emerging markets. And we have worked with a number of companies who haven't tapped into green finance yet. And I think there is a couple of issues there that we have to start with, and then the other side is the investor. So when it comes to companies, it's just understanding what the opportunity is. I recall just about a couple of months ago, we had an in-depth meeting with one of the agri-focused banks, and they were looking at issuing a green bond, and they're looking at issuing a green bond. And I think the biggest obstacle was understanding how much climate smart agri they already have on the books. They didn't even know about it because they are not measuring it, they're not looking at it. They've done the basic environmental screening, but they focused on irrigation finance, they focused on better use of land. And suddenly they realized that, oh, okay, this is actually something that would qualify under green finance for agribusiness. And we didn't even know we had that. And so first of all is knowledge. Second, I think you rightly pointed out a little bit of a culture, right? So we didn't have to do it. Why do we have to do it now? Actually, you don't have to do it, but it's a good thing to do. And the other side is the investors. And I think where you have companies that are pressured by investors, they're probably a bit faster in the uptake. Where you have companies that are pretty much self-financed or on a sort of steady trajectory, there is a little bit of less pressure on that. But I think at the end of the day, we are looking at what's happening around us. We are looking at the climate, which is the next crisis to come. We are seeing what, in the US, we are on hurricanes that are sort of in the second part of the alphabet, second part of the Greek alphabet already. So those are the most active hurricane season. And, we can debate why and what caused it. The reality is that we are seeing climate risk realizing in front of us. We may not call it that way. We may call it weather risk. We may call it something else, but it is actually happening in front of us. So this is not a theoretical kind of in the future risk. This is something that is happening today, and it's affecting balance sheets today and income statements today. And so the debate of, oh, well, who caused it and why do we have to do it? I think we can put it aside. We need to deal with direct impacts of climate risk realized in front of us, on our balance sheet, on our income statements. And the question for the CEOs and CEOs and CFOs will be, okay, what am I going to do about it? And how do I protect my balance sheet? And you protect your balance sheet by investing for the future, by investing in a growth that will be, not the growth that was, and bringing investors who want to go on that journey with you and will hold you accountable to it.
And of course, part of that, we mentioned the top tiers companies earlier, and of course, had mentioned the entire ecosystem. Now, looking at SMEs playing a critical role in this ecosystem, and I think for a lot of regions will be the accelerator of these opportunities. I'm jumping to that space. You just mentioned education and knowledge around these aspects. What are the current initiatives that you're seeing in the Middle East as well as globally to help educate SMEs? Of course, the opportunities for green finance, or do you see them more so forging their own paths in terms of financing and going on their own routes?
I think great question. And I think the reality is that most of the SMEs are not funded by large multilateral lenders like IFC or the World Bank. Most SMEs are financed by banks in their home markets. And so our initiative is to go to those banks and help them understand the same opportunities that we understood over the years and we started exploiting for our own business as IFC. We started measuring climate business back in 2005, way before it was fashionable, way before everybody else was doing it. But we learned it. So we issued, and I'll give an example with the green bond, right? So we issued our first green bond on our own balance sheet for our own funding, right? 10 years ago. And once we issued a few, we learned how it worked. We knew what kind of systems we have to have in place to match the projects to the funding, right? Because you have use of proceeds clauses. And then we said to ourselves, okay, we've got 700 banks in our portfolio. We finance 700 banks in emerging markets. We can go to them and help them understand what we have learned. And that's what we are doing now. And the demand for this is huge. And a number of our sort of larger banks in our portfolio already issued green bonds with us. And many of them are learning how to do it. So for example, we have an initiative in Latin America, which maybe one day we can bring to the Middle East. It's called Green Banking Academy, where we took top 50 banks from the region, and we are doing advisory work for them to understand what green finance is, how to do it, how do you finance SMEs and larger companies for green finance, and how do you actually do it? And the recent demand has been on climate risk. So how do banks measure climate risk on their books? And that's definitely a new area that banks are looking at. So how do you get to SMEs? You get there through financial institutions, in emerging markets, because they are the vehicle to get there. And then those banks can obviously choose who they want to finance, how they want to finance, and go through exactly the same trajectory as sort of we have gone through over the past decade and a half in the space of green finance. So I think that's the key to do that. The other part that is helpful to SMEs is regulatory environment. So governments in countries, we are working through Sustainable Banking Network in about 30 markets where financial regulators are starting to think about, okay, what do we need to do to understand green finance better? What do we need to do for the banks so that they do more green finance and perhaps less brown finance or more transition finance, as the case may be? So that regulatory environment is quite essential. And of course, it's a journey. It's not something that's going to happen quickly, but just having that conversation with the financial regulator to understand what needs to happen in the banking sector so that the banks are prioritizing certain things over other things is going to be essential. And then SME funding is crucial because SMEs are the backbone of most of the economies in emerging markets. And I think funding them through banks that understand how you look at business models of tomorrow is going to be essential for the future.
Excellent. And before we wrap up, I just want to ask you, if we're looking out 2 to 5 years, what's your over the horizon thoughts on where you see this sector going in terms of energy, but overall the opportunities for multiple industries, of course, a part of this new green recovery, let's say. What would you say is your over the horizon perspective on what your overall outlook is?
Great question, and a couple of thoughts. I will not make too many predictions about the energy sector, but one thing is very clear. We are going to be using a variety of fuels going forward, but we're going to use them in different proportions. And economics will drive what we use and what we don't use. And I think economics is very clearly pointing to what the future might look like. And that is going towards a tilt towards more renewables, towards more offshore wind, onshore wind, solar, large-scale solar, and many others. So that's on the energy. I think what is going to happen in climate finance, the second trend, is that people will realize that it is not just the energy, it's what we eat, it's how we live, it's how we transport ourselves that has as much impact as energy. Think in the climate business circles, it used to be renewables only, but we realized that, I think it was at the climate conference back in Bonn about 2 years ago, where the global community acknowledged the role of food and agribusiness in both as a culprit and as a victim of climate change, and therefore the need to do things differently. It is about how we transport ourselves to work, from work in the cities, and it is about how we finance institutions and businesses around us. And I think all those will look very different 5-10 years from now than they look today. And I think COVID actually accelerated, as we talked earlier in the interview, COVID accelerated those trends. While we are all working from home and we are traveling less, and we have very different mileage on our cars than we would have, in the 6 months prior to the pandemic. The third trend is the investors and asset owners. As financial assets are being transferred to younger generations, those generations are increasingly more aware about how their money are spent, and they are pushing asset managers. Those asset owners, new asset owners, are pushing asset managers to do very different things with their money. They still want to have returns. They still want to have good returns, but they also want to have impact. And I think impact investing, which used to be sort of a very niche space maybe 4 or 5 years ago, is becoming very much of a mainstream. You have probably seen IFC's impact finance principles, which we are very proud of. And I think this will become even more of a mainstream. So it won't be the sort of a corner of finance, it will be the mainstream of finance, and then there'll be everything else. So those are the three things. I think the focus from energy to everything else, focus of investors, and energy itself already is being shaped by the COVID trends as we speak.